longer. Okay. Let's get started. You guys can see the screen. So again, we've been obviously having these conversations for quite a while now. We're going to start diving back into the basics for some of the newer folks. I'm trying to like structure these now where like over a 2 or 3 week span, maybe we touch on different topics. A lot of this is obviously going to be driven for the basics, less kind of advanced stuff to try to get people to really understand the importance of all of this and its value. Um, so again, I will get to the Q&A after I'm done with my basic spiel, or as I'm obviously talking about gamma, charm, and like positioning. Feel free to type any questions you guys have in the live chat here, and we can kind of cover the different positions or whatever you guys are interested in. Let me just tweet this. Sure, Abdullah. We'll touch on Dex. Probably won't touch much on Vex, but we could just touch on the delta exposure piece, and I can kind of explain it to you. Oops. But we can touch on Vex probably a different day. It's just getting a little too much into the weeds for this particular session. Cool. All right. So let's get rolling. Obviously, when we're talking about dealer positioning, what we're driving at here is options positions inside of the SPX complex, right? And the reason that we kind of care about this information and the reason that we have this data here at Options Depth is there are certain things that have to happen inside of the market based off of the dealer positioning. Now, the beauty of all of this is the calculations that we have or do in here are not what we call naive. So for you to understand what you see mostly on social media or X/Twitter is a lot of naive calculations. While there might be some value in understanding some basic areas of where volume is going off, there really is no way of truly knowing if that naive calculation is going to involve any type of dealer hedging. And why is that? What is a naive gamma calculation? Well, simply put, what we're talking about is if you naive gamma calculations assume that everybody is going to short calls, customers, and dealer, and everybody's going to buy puts. We know that in a healthy market, that's not the case. The reason they came up with this calculation is years ago, before this was popular and there was 0DTE options. That's what a lot of people did, right? They hedged their downside and they were selling calls to buy, some of the puts that they were going to take to hedge that downside. We know that that's not true. Today, people are doing all types of advanced stuff, hiring condors, butterflies, getting long, getting short, right? Selling across the board, credit spreads, debit spreads, right? There's a ton of information that you're going to have with all of this. So what we're looking at here, more than anything else, is what those positions do and how they make up our gamma and charm profiles. So every time someone gets into a position, and the reason we care about this is a market maker has to hedge it. So let's say that someone is going to get into a put or call, depending on whether it's short or long, the dealer is going to hedge that instantaneously. And then after that, they're going to dynamically hedge their book based off of how their delta changes. All they care about is being delta neutral. And for our purposes, that's what we're going to talk about. So all these positions that you see here in the middle are net market maker positions. And the way that these are created are from how customers buy or sell calls and puts. So anything that you see on this side, which is just customer positioning for calls, is going to be the opposite end on the market maker side, right? So you see a customer here today is short on the 7240s. There's 14,000 contracts. 7250s, they're short 10,000 contracts. The market maker will be long those contracts, right? So 1300, and you can see it as the inverse on the chart. Very, very simple, right? These positions are what create that gamma, right? So if a customer, short the call and the dealer becomes long that call, they're long that gamma. Vice versa, if a customer is buying a call or buying a put, you're going to see the opposite effect. So if I pay attention to this cluster down here, you're going to notice that there's some long calls at 7180, and that makes a negative gamma for a market maker on this side. Now, since we're talking about delta hedging and why this matters, gamma being a second order Greek of delta, the reason we care is it's the acceleration of delta based off of how price is moving at the time, right? So if you know that delta is based off of how spot prices moves, and then delta moves from that, gamma you can look at as the acceleration of that delta, right? And how it moves or adjusts. And the reason we care about that is we want to know in the market potential inflection points on where positioning, kind of changes, or how we can play along with the market maker and how they're kind of adjusting their books as time goes on. Okay. And obviously, we're getting a little bit of a sell off now, which is interesting. I might have to adjust some of my puts here at some point. Um, Anyways, so these heat maps that you see here on the left side, this is a gamma heat map, and all it's really showing you is positive and negative gamma. The easiest way to visualize positive and negative gamma is in a 3D lens. And I want you to think of positive gamma as going up a hill, and negative gamma is kind of going down a hill, as if gamma was terrain, right? What's easier to do, go up a hill or go down a hill? It's easier to go down than it is to go up. So think of when we're in positive gamma environments or positive gamma pockets, particularly ones that are large, dealers are going to trade against price. And then it's the exact opposite on the negative end, right? They're going to trade with price. And we can see that. And I'm going to show you guys this on a 3D lens of this dashboard. But here's today's 3D map. And it's pretty clear. This is a good day for an example. But all of that customer positioning, these short calls that we talked about before, are creating this large positive gamma ridge or hill. Well, if you're spot price and you can see this as a ball, it's tougher to go up there. You can, right? And we see there's trades where we will push into these positive gamma nodes, right? And we get these gamma magnet trades. That is obviously something that can happen. But for the most part, you're just looking at what the hedging effect is. So if price action doesn't want to push higher and dealers are selling against it, then you're going to know price or spot price is going to be slow. If people want to keep buying, right, and we're pushing into positive gamma, yes, is it going to be slow? Of course. But we might just have a grindy, trendy tape, right? So that's something gamma can't tell you. And that's the problem with a lot of people on there is everyone just assumes gamma's directional. If we see positive gamma, we're going higher. If we see negative gamma, we're going lower. It's not how it works. It's reactionary based off of what spot is going to do, what price wants to do. If we get a headline like we are right now and the market wants to sell off, it will sell off. The speed of that sell off will be determined by how much they dump and then how much dealers have to adjust the delta on their books as they adjust. Okay. So this is your lens. So this is, you see that ridge, spots going up, coming down, spots going up, coming down. And then there's not a ton of negative gamma exposure here yet until someone decides that they want to maybe pile into some long puts on the day. Now, why are we looking at this from a 0 to D perspective? Well, gamma it's the largest at the money, closest to expiration, right? So when gamma is the largest, as you can see at the peaks at the time of expo, right? So if we were near this strike, this gamma is going to be large. And you can see this massive mountaintop. So if price is here towards end of day, what is the likelihood that we're going to break this? Statistically speaking, not very not a high probability. Sorry. But vice versa, if we are at end of day above all of this and we're getting towards this negative pocket, what are the odds that price goes towards this, this hole that we have? Well, probably a little bit higher if that's what price action wants to do, right? So what we're looking for through all of this is just to define areas where we can get some edge and increase probability for how we trade the indexes. And you can take this information through SPX and use it to trade futures, SPY, QQQ, anything on the index complex, right? This is all super important. And all of the big players are playing inside of SPX, which is why we pay attention to this more than we pay attention to some of the ETFs or some other areas. Okay. Does anybody have any questions as I'm talking about the basics of gamma right now? I'll pause real quick. And then I'm going to go pull up my put trade real quick. And I think I'm going to adjust it. So just give me a quick second. Oh, yeah. Yeah, these things are double now. All right. I am just going to cover. Screw it. Over 3/4. Okay. All right. Let me go into my. Go into my account and cover this real quick. Come on, give me a good fill. Okay. Sorry about that, guys. Apologies. I was kind of waiting for this news headline to kind of come in today. This was not a gamma trade, so apologies for that. But anyways, no questions on this. Okay, great. So that solves that's the gamma component of this, right? So when we go into the day, what you're trying to really understand is what kind of environment am I in and where are going to be the inflection points on the day, right? So what you're looking at on this platform, obviously zero D positioning as of now. If I were to start at the beginning of the day, what I'm looking for is how positions adjust and where we kind of stand with the gamma map. So going into the today, there is a high positive gamma cluster sitting up here at 72.40 through 60 from all those sold calls, right? Price, though, was at 71.18. So what I'm going to look at and try to understand is if I'm sitting at 71.18, this is 72.50, how much of a move is that? That's a lot for spot price. Does it mean that we can't push up into that? No, it doesn't mean we can't. However, I know we're going to need a lot of buying to get up here. So what I'm going to wait for is some potential movement where it looks like we're in this trend higher environment. We want to keep pushing higher. We keep pushing higher and we see it. And then you could potentially play something to try to pin towards this positive gamma node or magnet. But just because you see a large positive gamma area or a large negative gamma area does not mean we necessarily have to go to it or through it, right? You're just trying to form an idea of where there might be some friction or resistance. And today that was the initial. The next set of a resistance that we got was as zero DT positions kind of came in, right? So in here, if we look a little bit further, we started to notice that people were coming in and selling some calls on the 7160 line. Not a crazy amount of size, but you can notice that this green line here is a gamma peak. That's popping out of those short calls that customers have. So the first thing I would say is, okay, that's my potential resistance area. There's a positive gamma cluster. I'm going to look for potential trade there to see if we can get above it. If we get above it, that might become my support. If we do not get above it, that is my resistance line. And I know that that's a potential inflection point, right? Very, very simple, not a complicated thing to understand and look at. Okay, so that's gamma in a nutshell, right? Very simple. You're looking for those points. Then on the other end of it, you're also looking for negative gamma to look for potential, we'll call pockets of speed from the delta changing so fast that dealers are now playing with price and adding fuel to the fire. The best example I have for this, and if you guys have been with me, you guys know I'm going to go back to this because it's the best one. But this goes back to March quarterly end. And we had a JPM caller sitting at 64.75. You notice that this is 64.42. The top of that was 64.59. Let's see. Why is this not working? Oh, I'm looking at the wrong thing. Bottom end was 64.42. Top end here, 65.15. That is a lot of movement. Why? Well, we caught a bid. There was a little bit of a headline to give a catalyst in order for dealers to hedge their delta, right? With regards to gamma, they have to start buying with price, right? So as they started buying with price, it added fuel to that fire. You could have caught a momentum trade. You didn't even have to be in this right off the rip, right? You could have waited for us to break that strike. You could have started to build a position into it. So it's important to know where those inflection points are, where you might get some more momentum in either direction. The one thing that you don't want to do with most of this data or information is try to say that something has to happen. That is the biggest mistake most people make. And I see it a lot with a lot of these plans that people post. You want to use the positive gamma nodes as resistance and support levels, and then the in-between with negative gamma as just areas of what we'll call it transition, right? Where things are going to adjust. If you see a certain profile and you start to notice that there's reactions at these levels, that is an important thing to notice. But most of the time, and the way you're going to look at this, you're going to get yourself into trouble if you pay too close attention to the positions and all those things. You're looking for inflection points, you're looking for support and resistance, and you're just trying to give yourself a higher probability when you get to those positions. And there's other trades that you can take off these profiles with charm and gamma that are a little bit more advanced, which we'll cover, probably next week when there's specific setups that you have. But for the basics here, what you're just looking for, understand the positive gamma clusters, understand the negative gamma acceleration zones, watch the gamma flips, in particular, these black lines, they can act as support and resistance, and then watch the gamma peaks that you have on the positive gamma end, right? Does that make sense to you guys, right? When I'm talking about gamma not being directional, there's a reason we say it, right? Because it's a thing that adjusts based off of what's happening inside of the market, right? There'll be days where you're in a negative gamma pocket, price action's doing nothing because volume's low. There is no speed. There is no a deep adjustment of delta. And that happens quite often, right? So just because you see negative gamma, don't assume that we are just going to instantly start going quicker and there's going to be a lot of hedging in each direction. It's reactionary to what price action is going to do. Okay. So if no one's buying and selling, net, nothing happens except till we talk about charm. Okay. So when we swap over to gamma, the second component that we talk about here is charm. Now, what charm does is it changes the dealer's delta with respect to time. Okay. So I have my own colors on this to match my charts, but when you see positive charm values, which are in the red box, that means with respect to time, dealers are going to be sellers. The delta in their book is increasing. They have to sell. In the blue areas, they have negative charm. That means with respect to time, dealers will be passive buyers. So let's make an assumption here. Price action is dead. Nobody's buying anything or selling anything. The positions are not changing. Charm would tell you what has to happen with respect to time. So if we're in a suppressive charm area in the red and nobody's doing anything, we're going to naturally slowly go down as they have to hedge the delta on their book. Now, again, these positions change, which changes your charm, which changes your gamma, right? So what you're looking for from this perspective is what are my guardrails, which will be your flip lines that you're paying attention to, like you see at the beginning of the day. Where are my guardrails? And then on top of that, what kind of wind do I have with what comes to the spot, right? Is my wind supportive where I have a passive buy going on? Or is my wind suppressive where I have a passive sell going on? Right? So that's where you're taking from this. And you want to keep it simple, right? Keep it simple. If you pay attention to this enough, you'll notice, and you can see it here, price likes to dance around these levels, especially when we're not doing a whole lot. Okay. And these values are not that large up here, right? Charm is going to be much larger end of day, which we'll show as we get towards the end of the day here. I'll show you guys kind of what that looks like. But it likes to interact on this line and kind of bounce around. There are days, though, where the positioning is so light and we're changing so much. And I'll show this from yesterday, where you're going to take a little less value in the flip lines for support and resistance only because as positions come in, they're changing so much. So it's a little bit tougher of a read. But on other days where there's a lot more positioning, these are typically really good areas for support and resistance trades, like early on in this week. And then yesterday, for instance, it wasn't, as much. And then there are some more advanced strategies you could take based off of this wind. But think about what's happening right now. Right. And this is not necessarily options depth speaking. This is just more trader, but you have a headline that came out. We start selling oils pumping, right? All of this, not that it's moot. It's just, you can understand what kind of speed I'm going to potentially have here. Okay. We have some passive selling, but the values are not large. And we have basically neutral to positive gamma, right? So this is just going to be natural price action playing it out. If we were getting this sell in a huge negative gamma pocket, you would expect there to be acceleration as we kind of push through this, right? So that's what you're taking from this when you get these types of catalysts that you cannot control. You can't control what Trump says or Iran or any of those other headlines that kind of come in, okay? So when we're looking again at charm, you're using those as your guardrails and then understanding what's passively happening. Just keep in mind, sometimes these values are low. So if you look at your box here and you notice at the top corner, it says that right now, 2.2 is the number. That means dealers only have to sell 4 contracts over the next 5 minutes. That's nothing. Vast majority of people probably in here who trade futures or can do 4 contracts in 5 minutes, right? So those values are minimal, so they can easily be absorbed. Where that gets a little bit trickier is towards end of day when these values get large. And I'm just going to use the top bubble here as an example from 72.20 to 72.40. But these are a lot larger, right? Negative 200. So there's a lot more passive buying. Now, one caveat to all of this is end of day, particularly the last 10 minutes, you usually get a flood of liquidity into the market from mock and some other things, right? So that's something to take into it. However, if you know that above there is a large passive selling pocket, you can make an assumption in your head that depending on what mock is or whatever kind of liquidity we get, it might be tougher or slower to push through those values, right? Or vice versa. If we get into this area and we have price action working in our favor, we might get an uplift on the bid to keep pushing us higher, right? And this is towards end of day. With the way I like to use charm again is the guardrails, right? And then understanding where towards end of day, if the values are large enough where they might kind of take over before we even get to the end of day, right? Like I prefer when mock does this or when charm does this, where we're pushing out an hour and a half, 2 hours into the profile where maybe there is less liquidity and this is going to have more of a say in what happens with the market, right? And the same thing, because you could see it here. Look at today. These values aren't large until the last like 10 minutes, right? So this is where it gets a little bit tougher. However, if you were up here, towards end of day. Look at these ones push out to be significant a whole hour and a half before, right? That's where I get excited. Okay. So just think of charm passively, respect the time. Gamma is going to be something that comes in and makes an adjustment on delta with the respect to speed. But again, price action will always reign supreme. And that is what you're basically playing off of. Okay. So hopefully that makes sense. And just be leery of those that look at, 70-70. Oh my God, we have a positive gamma thing here. Look at this little dashed line. This might be an effect. It's not large enough to really matter. Okay. It's just not. You're going to kill yourself if you're trying to find every little 5 handles or 10 handles where we're in zones that are going to do a bunch of stuff. Just keep it simple. Stick with what are the big inflection points? Where are the acceleration zones? What is passively going to happen? What are my guardrails? And then where can I look for trades? And then understand what's happening, right? A lot of us play gamma peak trades. If I went to today, I don't know what happened with this one. I might actually get a good example of people piling into puts here. Right? But right here, I'd be looking at potential resistance up here at 7160, potential support off this gamma peak. But again, you get a catalyst. There's not enough here. It's not large enough to maybe give it a cushion if they want to sell it, right? You want to see a deep, deep blue area to really be like, yeah, I have a lot more confidence. Doesn't mean we don't. You could still trade off of this, but you just got to take some context into what's happening in the actual market. And that's the reason why I'll never sit here and kind of BS you guys and try to make it seem like this is the holy grail where no matter what this says, it has to happen. That's not how this works. It's all about understanding the environment, and we're very transparent on the way that we explain this to people. Okay. But I do want to show a couple examples of some things that change throughout the day with zero DT positioning. Like I think right now we're getting a good example. Notice what just happened now at the sell. Right? There's no negative gamma here. Okay. This is 20 minutes ago. Getting more negative gamma as we're selling. Even more now, we could build this negative pocket. Why? Well, go look at your positioning. What are people doing? Right? What are they coming? Are they coming out of positions? Are they closing down puts? Are they getting long puts? Right? And it seems like you had people coming in and getting long puts and then starting to close them off. Or some of these, spreads that people might have been in, or these short strikes that they're in, they're coming off of them. That changes the profile. Okay. It gives you that pocket and makes adjustments. Or are they getting long, right? They buying calls, which it looks like they are, right? Someone came in and bought some 7105s right here, right? So now you have long as they closed out their puts. Okay. Now you have someone playing long. And it doesn't look like it's a spread because of the 7100 hasn't changed. So I can make an assumption here that someone's buying 7105s for a bounce. Okay. So that's another piece you can use of this. It's just positional, right? What are people doing? What are people buying? How are they handling with these dumps or anything like that? Does it mean we're going to go up now? No, it doesn't. But it creates negative gamma. So now we have this little negative gamma pocket where there's some potential for a little bit of an increase in speed. Is it a large negative gamma pocket? No, the value is only like negative 100. It's not nearly as deep as a large pocket, which will have values 500 to 1,000. Okay. So that's all of that. I will now open up kind of from the basics here. Some questions that I kind of see here inside of the chat. I had a question about Dex and Vex. Okay, we can go in that in a second. Okay, yeah, Abdullah, we can talk about Dex. And then Abdullah said, I learned this from you. It changed my perspective on this. Mostly everyone has a naive understanding of this on the internet. Yeah, it's a big debate online. My whole thing with it is if you, and it's really easy to kind of understand it. You can even look at it from an equities perspective. But if people are piling into long calls, right, and then it shows off not naive gamma as a massive call wall, well, what do we know about negative and positive gamma, right? As we push into positive gamma, we expect price to slow down. As we push into bigger strikes in negative gamma, we expect there's the potential for a speed increase. So if everyone's getting long calls, that means the dealer short the calls. That makes that position short gamma. From a dealer perspective, it's negative. So if you're going to call something a big call wall, from a naive gamma perspective, because you make the assumption all those calls are sold, but it's really negative gamma, it changes completely how you view it, right? Most people would look at it as a wall and say, I'm going to get off it. Now, the only difference is since a lot of people talk about it, you might get a reaction. But from our purposes with dealer hedging, it's not how it works, right? And the same reason that people talk about gamma flips, there is a gamma flip when it comes to regime change. But intraday, when you get enough gamma on the books, since 0DT gamma is the largest, you get these pockets. And I think that's an even tougher concept for people to grasp, that, hey, on an intraday basis, you might get into negative or positive gamma pockets. It's not just the regime that you're in, right? Okay. Let me go into depth view. There was a bunch of questions on this the other day. I actually think, forget who it was, but depth view is just another way to look at the positioning than what you see on all the other sides. So let's go to table. I have different colors on mine, but let's just look at positions first. All right, so what you're looking at in depth view is really simple. It shows you all the expirations, and it's going to show you, I have it set to market maker, what their net positioning is on each strike, right? So this is the same thing that you would look at bars. Instead of bars, now it's a table. That's it. There's no real difference, but at least you can see more expos, where if you're like, hey, I want to see if there's two strikes, like, okay, 72.50, right? Big strike here, big strike the next day, big strike the next day. This might be a really important level for me to pay attention to, 72.50, because there's so much positive gamma here over the next 4 or 5 expirations, right? Something to pay attention to. Same thing kind of on the downside, right? Okay, 71.60 for the next 2 days. That's going to be, maybe that's something to kind of pay attention to. And you're just kind of looking for the larger inflection points that you could potentially have over time. But remember, gamma is always the strongest, closest to expiration. So if you're looking for really strong walls, I would usually keep it to like 1 to 3 days or so. When it comes to DEX on here, this is just showing you, and it'll probably be easier to show you not like this. This is showing you a market maker or a customer, probably like their delta exposure off of the combined positions. If you want to use this, you can, to see where they're positioned for short or long end, where strikes really matter to them. From a hedging perspective, sometimes it's important, sometimes it's not, because there's times, like for instance, and I think I can show this on a firm that was taking the synthetic longs. Let me go back and try to show this to you on here. It's easier to look at delta exposure, in my opinion, not on depth view, but on the bars. But if I go to customer positioning, I change this to DEX. I don't want to look at that. I want to look at just firms, as you can see. Let's go back. What day did they do this? Would have been OPEX. They had a box trade on. Could see the delta exposure bar. And then if I'm not answering your question the way you're looking for, just let me know. But damn, they really sunk this thing a little bit. All right, let me give this a second to load. Come on. There we go. All right, I think it would have been on this strike during the day. All right, let's just look at 6,800 to be an example. Right, so you're looking at, when you're looking at the gamma exposure, this is not DEX. It should show up more probably. Okay, yeah, that's what I'm talking about. All right, so on this particular strike that they had, let's go to AM Expo, and then let me adjust this down. Come on, don't die on me now. Okay. Oh, just for sake of purposes, I guess it doesn't matter. But what I was trying to show was during the OPEX cycle that we had, there was a box trade position that was put on at 7,000 by 6,000. And what it showed was you would have saw a large delta exposure strike, or you can even see it would be like this, where on one end there's short puts and long calls, and on the other end there's short the calls, long the puts. So for them, it's a delta like neutral strategy, but it's going to show a large delta exposure line sitting here like this. So if you're looking for using delta exposure from a specific for a specific reason of trying to understand where it's an important strike for firms or professional customers, you can to see where they're positioned from a directional standpoint. But understand, especially in the firm side, you don't know their books. So like people were talking about this box trade on that OPEX for the AM Expo. It's something that I tweeted about. They're saying, "Oh my God, there's so many contracts." Yeah, it was meaningless, right? Because from a gamma perspective, they net took each other out. From a firm delta exposure standpoint, yeah, maybe that one strike was important, but it was offset by the box side at 6,000, right? And I don't know why it's not letting me show it with the AM Expos. It's out of the data set, so I'll try to get a screenshot of it. I know I have it on my Twitter, but not that important. But does that answer your question at all, Abdullah? Apologies if not. Like you can use it to see where there's an inflection point or what they're directionally bias on. Just you take it with a grain of salt because at the end of the day, you don't really know what they're driving at. Right? Like right now, it says that there's a ton of delta exposure for firms down at 6,800. It's so far away, it doesn't even matter. Like you would look at this and say, "Oh my God, they expect a crash." Like no, that makes sense. But if you're using it from a customer's perspective across the board for all of them, it's just as muddy as the other side, right? So what are you going to gain from this? Like, what are you trying to gain? Like, this is muddy for today, all customers. Up here, they're longer. Up down here, they have someone that's shorter. Again, since it's a mixed book of all of retail and firms and the positioning, it's just tough to really decipher what you're directionally trying to go for. Okay. Ruben, does Gamma also work during futures in the after hours trading? Yeah. Yeah. There's positions in there and it totally works. They still have to hedge their positions. It's a little bit different, but it still does, right? If they're going through in like certain levels or inflection points, they still have to hedge their book. They don't just stop hedging their book in the overnight and just say, screw it. We'll wait till we open up in the morning to just dump on the market. Um, but yeah, that's kind of what we got. Any other questions on here? You guys got any more questions? Um, this is where you'd probably lean on looking in the upcoming day. So market maker exposure, upcoming day is where you'd go to kind of see the heat map of where there's some potential zones and acceleration. And then you could just do the simple math from SPX to ES, just kind of convert it if you're looking for that. Or you could do the same thing in depth view. So you just go to depth view and you could look at tomorrow's expiration and look at where the larger positions are sitting net wise to get a better understanding of inflection points or areas. Yeah, Abdullah, it is muddy, right? I just like that's why like again, there's people that probably stare at this and find value. That's part of the art of this. Like there are certain things that everyone agrees upon with how gamma works, how charm works. But when it comes to trading some of it, there is very much an art to this. There's not one style that just trumps everything. There are specific setups that a lot of people agree upon, but a lot of this too is just understanding the cause and effect of price action on the actual map with dealer hedging and taking that for what it's worth. And then as you see stuff and spend time with this over, 6 months, you'll start to notice more and more of how things adjust or what happens, right? Like I think I got a question the other day of like charms only relevant at the end of the day. Why do I care about a charm flip? Well, watch price long enough and you'll notice there's a lot of interactions on it. Is it every time? No. But just watch it. Just pay attention to it. Does everything have to be super scientific? No, it doesn't. Right? I can make plenty of arguments as to why it matters, and there's probably people that can come in and make arguments as to why it doesn't. That's the thing with all of this and kind of the beauty. There's still very much an art component, while there are certain things that everyone will agree upon. Yeah, for sure, Abdullah. Like the way that I have it, I look at positioning like I don't even use depth view too much. Like I do this just easier for me and I set different expirations. Like I'll be like, all right, I want to see today's and then I want to see what tomorrow's are and then I want to see the next 3 days and then like that. Or if I'm looking for a quick glance, like you said, I will go into depth view and just look for larger strikes that are back to back on 2 days to be like, yeah, this is going to matter more. Or hey, they're piling in here. Or if you're a spread person who likes to sell premium, People that do that shit all the time, they sell 1, 2 DTs out, and you can see what lines they're targeting, right? By how much they put in. And just takes some time to go through and start to decipher through the positioning, like what is a spread, what's just about outright, and so on and so forth. Yeah, Abdullah, think of it as like when you're talking about what's the point of using it, it's just another way to look at the data, right? In the same way that there are some people that like to do this on their charts. This is not me, but if I go here and I change my market maker exposure to OD score instead of absolute, watch what changes. Look at this, right? OD score is looking at the last 90 days to determine the gamma implications, right? Of what it is. Now this looks like crazy positive gamma on the upside, crazy negative gamma on the other side, but this is just based off a percentile. So we're in the 50th percentile of the last 90 days. Some people like this better. They prefer to see it this way. I prefer absolute values. So it's just one way that you can, decipher the data and to make it fit the way that you want it to. Right. So if you see this, like I'm not going to look at this and be like, oh my God, there's so much negative gamma here. It's gonna be crazy. Like I look at it, yeah, there is some negative gamma here. There's gonna be some adding to the price and we're gonna sell off. If we start selling off, there's gonna be some fuel added to the fire. But if I looked at it through this way, this looks like this is just nuts. And we're just gonna keep, like there's so much gamma here, right? So, but just how you want to skin the cat, it's entirely up to you. There's no real true rhyme or reason as to which way you have to do it. Right? So that's what it is. Some people like absolute raw values. Some people want, to just be like, hey, in the last 90 days, this is where we're kind of at. Yeah. So if you're Ruben, what I'm driving at is just he was asking why people would use depth view. It's just another way to look at the positioning data. In the same way that if I go to gamma here and I adjust my chart from absolute values, which is the true gamma values, to OD score. OD score is just the last 90 days, right? And what percentile that is. So it's going to look at the last 90 days of how gamma has been. And then it's going to say, okay, the high end of this negative gamma was this. The high end of positive gamma was this. Now I'm going to put that into a percentile basis. And I'm going to say, okay, we are now in the 18th percentile of the last 90 days of negative gamma. That's it. It's very simple, right? Some people prefer that, right? Because now you could see just more intricate switches like you just saw now, right? You see how deep this was 10 minutes ago, deeper in color, we're in the 50th, and now we're at the 18th. That means somebody closed down something, right? Probably some long puts that probably got paid, wanted to close them down, or long calls that weren't working. And then you'd go look at the positioning. Why did it change? So it's just one way to skin the cat. Yep, that's it. Just looking at the number on the chart. It's just different ways to look at the data. I just prefer absolute values. That's all. Which means I got to change mine back because I don't want to look at that. So I trade futures too, Abdullah, for the most part, unless like today where I was sitting in SPY puts and I just got some runners now. It's I don't know if I'm allowed to get into that, to be honest with you. Because everybody trades differently when it comes to entries and exits. I mean, I do run my own thing where we kind of talk about all this if you're interested, but I think that'd be getting too much into me talking through as if I'm options depth, and that's not something I know they want to do. They just want the data speak for itself, and then you guys kind of trade off of it. All I will say is, if you have higher inflection points, and then you have a lot more confidence in this information and data as you stare at it, then you can probably change the way that you size, manage your entry and exits better when it comes to playing off like flip lines or playing through momentum trades. But there's definitely an art component to that. So I know that's not the best answer, but it's not something that we'll probably talk too deeply about in here unless I get the green light. Okay. But I will ask. Maybe there is a Webby we can do about using the data for trade management and less about the actual ideas. Because the ideas are what matters more. Being able to look at this information and understand based off of it where those potential areas are and how you can trade off of them is where you probably start. And I always recommend people size down till you get comfortable, see how price interacts and moves, and then adjust from there. Okay. Cool. All right. I'm going to cut it here. We can, now that the market is absolutely tanking, we're down 1.15%. So I have some runners to manage and some other stuff that I got to adjust on my book, which is good. So I'm going to cut it here. We'll go through. I'll be back again. I won't be here on Tuesday. I'll be here next Thursday again to do another stream. We could talk about more that you guys want to, with either advanced stuff or looking at more of the data. And I'll try to bring some more examples of different styles of trades like I did before, and how you guys can take advantage of this information. And then we'll go from there. And yeah, Karmic, I will post this one when they're, depending on which ones they are. If it's like where it's a lot more focused on something, then I post them. If they're just more Q&A focused, where there's not a lot of me talking about the positions or talking about what's actually happening, then we don't want to like completely post every single recorded session to the point where it kind of gets lost in the sauce. So we'll keep the stronger ones up there, but I will definitely post this one. But thank you guys for joining. Appreciate it. Anybody who's coming in on the public live stream, if you guys are looking to get 10% off your options depth subscription, use code LIVE10. There's a link in the description below the public stream, and come check out the data. I do these live streams Tuesdays and Thursdays, and we talk about a bunch of stuff, but really focusing and hammering on the basics of using the information and the data, so you guys can get better at all of this. And then as time goes on, we will dive into maybe some more advanced concepts. Sounds good. Thank you, guys.